So by looking at 1947, there was a post-World War II recession, and government spending has dropped 75%, and then 55% of GDP too, over 16% of GDP. So roughly the same period of that federal tax revenue fell also by around 11%. Yet this stimulation did not result in a collapse of consumption spending or private investment. IMF was created, and so was the Marshall Plan. So asserted relations in Europe for the US advantage and ultimately the start of the Cold War. So the Marshall Plan created in order to restore back Europe and to specifically negotiate with nations that suffered terrible consequences in post-World War II. This plan was meant to help many of these poor countries. However, this would give a head start to the US to make a first-on deal with these countries so they could build on a trusted relationship later, and so they could a trusted friendship with these different countries on a certain deal. That way they won't go to the Soviets. So that was the whole purpose of this. And then the IMF, yeah, in other words, this was also something that came out of the Bretton Woods Act, if you guys recall that. And it makes sense because it's helped restore monetary funds with different countries, which is really what created the World Bank, right? The international World Bank in the world. And that was more pushed on after World War II because many of these countries were broke. So they needed help from the US by converting a lot of their currencies or a lot of frequent, let's say, trading exchanges with the US themselves because they had the resources to trade with them. So this could help provide much more growth in other countries' economy with the US compared to anyone else because one, the US wanted to trade outside and any different source. And obviously the Soviets wouldn't do this because the Soviets were more focused, let's say, inside their own economy. That's why many people chose not even Russia, even if they were open, because simply the United States had the richest resources now right after World War II. Because the UK fell a lot because the amount of debt they had to accumulate enormously since World War I. They got back to World War II. The country was poor in the UK and they had to rebuild the structure, which took them many decades to rebuild. But the US took advantage of that, and financially, economically, same, and militarily, also with innovation. All these things combined help lead the US on the top position. So really at this time, this is where the United States set all its pieces in place. And it's what made the country prosper for decades later, especially that a destimulation in this matter of what happened in the post-bear market, right? Because many people thought that the consumption would slow down, especially that the Federal Reserve would have to take care of inflation, but no one anticipated the amount of consumption level spending with private investment combined with that helped offset enormously these inflations. Despite the market crashing, the markets kept going up and up and up because every year people were consuming more and more and more, especially the veterans that came out of World War I. World War soldiers that came out of World War II. And now just a little bit of years later after this, that's when the baby boom happens. You have in 1948 where an 11th month recession began in 1948 and that lasted until October 49. During this period, unemployment peaked at 7.9%. The cause of this recession was a rapid rising in interest rates by the Federal Reserve. The 1949 recession was a brief economic downturn. Forecasters of the time expected much worse, perhaps influenced by the poor economy in their recent lifetimes, exactly from the Great Depression. They thought it would do worse because that's what they've been experienced to and how things got handled. But now there's regulations that doesn't make it likely to repeat itself. That's why each few decades are a bit different, but they rhyme. They don't repeat, they rhyme. The recession began shortly after President Truman's Fair Deal economic reforms. The recession also followed a period of monetary tightening by the Federal Reserve. And according to C.A. Blyth, the most important cause of the 48 and 49 recession was substantial fall in the fixed investments. This recession was pushed on from monetary tightening and from a reform that was called a Fair Deal. So let's look at what happened that year. Okay, it offered new proposals to continue New Deal liberalism with the conservative coalition controlling Congress. A few major initiatives became law, and then only if they had a considerable GOP support. The most important proposals were aid to education, national health insurance, and fair employment practices commissions. So you can say that this helped push on more security with the common individual in the country, similar to what they did after the Great Depression, when they helped create a lot of the Social Security and the FDIC and the SEC, which helped a lot of people protect themselves out of economic downturns. And you could say that this is somewhat the same. Really, they were able to reform a lot of this stuff because there was no wars that were going to happen later. No one was worried whether a country was going to invade the other. But more people, the US had the financial backup now, especially from the IMF and the Bretton Woods. They had the financial power to focus and dedicate a lot of their resources now and their concentration into their own integral system. The political system, most of all the economic system, most of all their economic system, and a lot of things that help the company proceed further. So great things happen basically out of the World War II. That's why I said that whenever there's a crisis, the greatest reformings or plannings come afterwards, because you realize from a mistake or you realized a perspective you didn't see before because you were forced to go into an extreme circumstance that you had to find your way out, and you learned a certain cause and effect that can help you proceed forward in the future without making further mistakes or the same mistakes, or reduce the amount of mistakes, but even evolve into a bigger good consequence. So that's sort of the nature that you see the world, the way how it responds to things, and you see how this nature responds related, and most importantly, to the markets, right? The markets. Why did the market fall down here? It didn't fall down because of tight monetary policy. No, it didn't, because that didn't happen yet. Inflation, the markets went down more because you just got out of a World War II, where many people have been used to the Great Depression, where too much high stimulation, overstimulation to what you can actually output, creates a very bad consequence. And everyone was afraid and sort of scarred, most of all scarred, in a way that they're like too pessimistic, that they didn't want to even get related to the thing because it was toxic. That's sort of the attitude that you see here. And then one overinflation data that they receive, along with the markets continuing to go up and up and up for years, well, that sort of creates a very cautious and stagnant bias in Wall Street, right? And then when unemployment goes up more, that's another reason for the market to fall down and for the Fed to finally do monetary tightening, which then people start to get very fearful, right? Because people know that the Fed is going to push the market down, and then people net sell everything because people think that there's going to be another great crisis. You got to think about it in that perspective. That's how people thought back then, and that's why the market went down. And of course, you can already think what Wall Street was doing, but these weren't actual like substantial reasons for the market to go down economically, and that's why consumption, despite all these different factors that people thought, consumption has stayed strong, especially even with unemployment. Because what I said, consumption, people will consume more, and especially a person that's been restricted from consuming a lot. Who's the people who are being restricted? Well, all these soldiers that came out of World War II, and I would say obviously with this era, let's say, wasn't so broadly diverse with women who, let's say, because of the ignorance, right? Because there was not the ignorance of expertise, so they didn't have the capability because of the discrimination in gender or in sex. So we all know this. And then by the time the soldier came in, well, majority of a lot of them had children afterwards. And these children, to provide safety and advancement for a better world, and especially after seeing economic strength and a lot of great things in the television, that boosts morale for people to spend, and especially creative products that people, manufacturers like Ford and others like Ford, that got an idea out of World War II from helping the government or helping resolve the issue integrally in the country. And they made a great product, and people wanted to buy that product, whether that was houses, whether that was machines. This was when a lot of this stuff started to blow up, and you can see all this being factored in the charts, because you see this place, the market goes up, right? But what happened during this year? Because the market was behaving pretty stagnant. The recession. There was a brief recession from rising interest rates, from inflation, right? Because there was inflation inevitably. The U.S. had to be in inflation because they had to provide war spending. They had to put a lot of money and boost money supply to create a deficit, basically, to create more debts. They could fund their integral operations by putting all the cash into the military. That's because they were fighting Japan and all these different enemies. So by consequence, during these years, they had to slow down inflation, right? From that, slow down this debt. And by slowing down all these different factors, it led to bigger inflation. And they had to deal in a way that they haven't dealt before, because they didn't really get the advantage to prosper this way, especially after the Great Depression. Prosper in this particular way after war, after like these different reformations. You didn't have a lot of great incentives for the Great Depression, but the thing is that many people were pretty depressed to get into the markets. So the amount of people getting into the markets right after the Great Depression bottomed, not a lot of people went back into the markets. There was a lot of retailers, sure, but there was a lot more institutional investors, people like Warren Buffett, a lot of mutual and hedge funds that were bringing up, even though they haven't existed yet, but they've been in development in this time, which pushed the market in, along with government too. But now you're seeing institutional with retailer now. And because the retailer had experience with the Great Depression, that they lost their money the last time they invested, that's why you have this volatility and this sort of stagnation going on here, especially from the recession. But during these years, since 48 and 49, this was just the economy going through a slight recession. Now we're in 1949, going into 1950, which we already read. Right now in 1950, there was problems going on with Korea. That's when North Korea on June 1950, North Korea did a surprise attack on South Korea. And remember that this uprising attack was being pushed on more and more and more by the Soviets. The Soviets got involved into, like they shouldn't, but that they did with different countries, especially with Vietnam, but that they placed their, it's like chess, they placed their little proxies into these different countries. And of course, and unfortunately, unfortunate to be one of those. And North Korea decided to attack South Korea because there was already a division between a lot of this communist ideas in the North from the Soviet Union. And then from the South, you have a lot of this more, let's say, a bit more capitalistic. It's a complete opposite. In its own country, you can imagine the amount of conflict there. The South Korea being more capitalistic because the U.S. is involved in that. But during June, you can see in 1949, and then by June, I have an article here. By June 25th, the North Korean People's Army surprised South Korea, and a small contingent of U.S. military personnel went to the 38th parallel. So there's basically an uprising attack. Kim Jong-un, the grandson of Kim Il-sung, the supreme leader who launched North Korean forces against the South, is in charge today. Yeah. During this period, the Korean War had important consequences for the economy. Rather than build deficits, so this is the thing that happened. Rather than build deficits, Truman, which was the president at that time, Truman preferred as a pay-as-you-go system, which was supported by the Congress. This strategy raised income in corporate and excise taxes to record levels. And that's really what incentivized the baby boom, because it helped raise income completely to a huge level. And at the war's outbreak, inflation skyrocketed as consumers hurried to buy, fearing shortages. Prices rose 11% from the war's onset until price controls were imposed in January 26, 1951. And its last year, war expense made up 14.1% of GDP. Wow. On Dwight Eisenhower, which was elected in 1952 on a platform of ending the war, which we'll eventually talk about, an armistice went into effect on July 27th, 1953. But let's look at June 25th. So that was exactly when North Korea invaded South Korea. That was right here. So that was actually on a Sunday, because this was on Friday, 24th, 25th. That's Sunday, because this is 26th on Monday. So that invasion happened on Sunday. The market responded bearish towards that event. But look what happened, though. The market didn't crash or anything. The market hit one of the moving averages, and it snapped back. Why? Because it's not. Is North Korea really going to affect consumption in the US in a big level? No. Is it going to affect it normally? No. Is it's going to affect it barely? Because first of all, the Korean situation is not like a severe situation like you had in World War II. Neither, despite a war, especially that you don't have these high amounts of debt from the country, because all this was reformed during the stagnation it's had for the past 3 years. But now by 1950, they're more settled out calmly, and they're more economically stable, you can say, that the country is able to withstand a little war in a different country, in a proxy war, because these are just really proxy wars. The markets responded in a bearish way very temporarily, but look at afterwards. Despite this, just the market went down for like 2 weeks, and it kept going up. So in these moments, and this is why I say that the Ukrainian war, what's happening right now, and what's going on with Russia, with China, all these different excuses that people want to put in, that there's going to be a recession and all these things, that helps the market go down, or maybe not. But if it helps it go down, great. If it doesn't, fantastic, because I benefit each way. I benefit if those medias push the market down, because I get to buy at a cheaper price. And why would I sell if I know consumption is going to be stronger in the next 5 years, 10 years, etc.? So it makes no sense for me to sell anything unless if I see the business that I'm investing in to not produce or be capable of producing the same amount of products or product strength as they used to do. If the product strength is deteriorating itself, I'm not going to invest in the business. That's the only reason I sell, right? The rest of the factors, I never invest. And this is the reason why. You guys have been seeing since 1928, all these different events. What has happened in total since 1928? The markets have been going up from 1950. We're looking at 1950. Market has been going up ever since now, since 43. And look, and this is what happens in real life. Unless then you know it, as time passes on and on and on, when you're thinking about this and that and a lot of different things, the market's now at 230 points. I remember in the Great Depression, in the charts that didn't exist back then, but in the Great Depression, the Dow Jones was literally $40. Now it's at 280. Does it really matter what happened 20 years ago? By thinking of all the terrible things that's happening, and all these terrible things that could happen will happen if it presents itself, but it won't last. Because, and especially that when a future comes ahead, people don't have time to think about that, and people won't think about it anymore. You guys really think of course they remember, right? Like that's the point of experiencing these things. You remember. What's the point of going through an event afterwards for the future? If you look back, well, to remember and to learn from them. That's the experience. What's the experience from? There's very few people in the world, but let's say Charlie Munger. Charlie Munger was about 7 years old when he was in the Great Depression. Now he's still alive. He's about 99 years old. And he says that he saw all these different things events uphold, and it helped him a lot because he realized the amount of irrationality in the world, how people respond towards a certain event, whether that event is a good thing or whether it's a bad thing. And that could create opportunities if you perceive it that way. It doesn't create opportunities if you perceive it in a problematic way. That's why problems are not problems. Problems are opportunities. That's what makes success and not a successful person. Every successful person utilizes every problem that comes by opportunity, by going to that person directly and selling them, like someone like that, or getting a piece of information and giving it to that person when everyone wants to not do it. And in fact, it's less competition. Do it more likely in that scenario. So you see, like, there's opportunities. You're able to come up on top even when the top dog doesn't want to do it. You're able to as the underdog because that's the opportunity. It's the crisis. No one wants to do it. We all know that when a crisis comes to hold, everyone's going to panic and they're going to get hurt, right? But you get hurt if you decide to be victimized by what comes in. But if you go straight forward and you brush the water out your face and you just keep walking forward even when the tide is with you or against you, you're obviously going to get opportunities because people are going to likely want to work with you, and you're going to provide information that no one else wants to because you're the one in depth in the subject when no one wants to do it. And you're able to get some good cause and effects that no one has ever even experienced by being in that different situation. So you see, this is at the end what I'm all talking about is that the person in the Great Depression, do you really think that they cared what happened, what they felt and everything back when they were 10 or 12 years old? Not at all. They're already 90 years old, 80 years old. They don't give a damn what they thought. I wouldn't give a damn. And I'm pretty sure you wouldn't care either. I'm not. Why would I make such a big fuss what happened to me 20 or 30 years ago when it's already the past? That doesn't matter anymore. No one's even talking about it. No one's going to talk. And I think about this so much. Whatever's in trend now, no one's going to talk about that 20 years later. No one's focused back what happened in the 90s with certain rock bands, with the computers upstart in that time and the amount of the retro videos with especially the advertisements in television. No one cares about that anymore. No one even talks about that. Why? Because people are emotional beings. They don't think about the long term as much because they're too deviant into what they feel currently. What you feel currently is what you're getting in the short term now. You get a problem tomorrow, you injure your leg. What happens? Are you going to likely be happy or are you going to be likely be depressed? You're probably going to get depressed because you're not able to do things in the short term. But you can see it as a disguising opportunity to learn about a different subject because now you're forced to not do what you were currently doing. You could use that time for productive matters. You see, there are opportunities. And those type of ways of looking about things always happens in the market. When everyone's panic selling, that's when you want to start buying. Because that's when the market likely bottoms and goes up more. I'm saying likely. It's not just because everyone's selling doesn't mean that they're going to sell more later on. That's not what I'm saying. I'm just saying that the probabilities for a person to be massively selling and to sell again is much lower compared to sudden buying. Because there's only so much that you can sell, and there's only so much reason that you can sell, right? What's the reason for the market to go down here? It wasn't because of high inflation, high interest rates. We already went that through 3 years ago. The market went up as it should. It had the free space to do it. And when one little event happens in the Korean War, this isn't going to push the market down. It's just going to do a slight correction because the market doesn't have enough factors. This is the key. The market goes down not because of one event. The market goes down when it has a perfect multiple events at once by many bad decisions from the past that couple on with what's happening now, and that helps push the market down. But that's not happening right now because all the events have already been resolved 3 years ago here. So the only event that's happening now is just this Korean War, which does help in a good way because you don't have to keep buying this relentless 90-degree rising. You can wait till the market corrects for some reason, which was a Korean War. Who the hell over here would have anticipated that the market would go down 6 months later because of a Korean War? No one. So you see, this is why I say that you never want to buy at the top either. And you never want to predict anything because it's beyond your control. No one can predict. If let's say the market was here and it looked like a great reason to go up, right? But then the market went down. Are you really going to pummel yourself because your prediction was wrong? No, your prediction was wrong, but it was something beyond your control. It was North Korea invaded the other. So it's like, it's not, does this affect the economy? No, but the markets go down because of anticipation, of fear. This pushes out all the people that can't stand the gains. That's really how I see it. People who can't stand the gains of the market. That's what it is. You get rewarded by gains by staying in a logical manner. This pushes out all the people that can't stand the gains by standing the long-term overview of the entire market. And it's able to give the opportunity for people to enter the market at a lower price for people who want to enter the market at a longer time. And we're just waiting for a slight correction. They weren't waiting. Here's the difference. They're not waiting for Korea to invade the other. No, they're just waiting for a correction technical. But anything can push the price beyond a lot of the moving average to a strong moving average because of anything. It could be macro, economic, geopolitical, and that's what we're seeing right here. And the market kept going up. If we look at 1951 to 1952, despite the Korean War, what did the market do? The market kept going up. Look, this is 1952. Now, in 1952, market ended positive in the year. But this is when Dwight Eisenhower was elected, because during the campaign of 1952, Eisenhower was critical of the Truman administration foreign policy and its inability to bring an end to the conflict in Korea. Truman challenged Eisenhower on the 24th of October to come up with an alternate policy. And he responded that the starting announcement that if he were elected, he would personally go to Korea to get a firsthand view of the situation. And of course, this boosted Eisenhower's popularity because he was able to defeat the Democratic candidate that he was facing. So shortly after his election, when he was elected, Eisenhower fulfilled his campaign pledge, though he was not very specific on what he would hope to accomplish. After he returned from Korea back to the United States, he remained mum about his plans concerning the Korean War. After taking office, however, Eisenhower adopted a tough policy towards the communists in Korea. He suggested that he would unleash the national Chinese forces on Taiwan against communist China, and he sent only slightly veiled messages that he would use any force necessary to bring the war to an end unless peace negotiations began to move forward. The Chinese, exhausted by more than 2 years of war, finally agreed to the terms on an armistice that was signed on July 27, 1953. So of course, Korea is gonna stop, because what did the U.S. do a few years ago? They've already demonstrated to the world of their huge military power, of the power of nuclear power, and they showed that on a demonstration on Japan, and everyone stayed silent and kind of stayed respectful towards the U.S. And of course, Korea, no matter how ideological Korea was and even is now, they do not want to mess with the United States, even being backed by the U.S., because they know it would be a very bloody war. Nothing great would come out of it at all. Neither the U.S., nothing great would come out of the U.S. out of this war either. Of course, afterwards, maybe, because we've seen that great innovations happen, but they're unnecessary if you can see them ahead of time. That's the thing, and that's the thing that I want to tell you, obviously. A crisis is not necessary unless it's deemed to do so if you ignore the facts by having the facts in your face. That's just something ignorance. But if you see the facts in front of you, take the facts and avoid mistakes that you would commit in the future because they're not necessary at all. You can cut through that process and progress more in the long term to get a better return. And that's what led to a lot of this. By 1952, the market kept going up. And then by 1953, though, the market kind of slightly went down during this period. This looks actually very similar to 2022 because the market by January, and this looks like nothing compared to what we've been seeing before. That's why it's good to look back at time, because the correction what happened in 2022 is looks nothing compared to all the other problems that's happened in the past. From January up to September, it bottomed in September. It's actually very similar to 2022. Market bottomed, and look at this huge, strong bull rally. The person who bought here did very well in that investment. A huge bull run. And you want to know what this bull run was cost? 1953. So look, you're going to see specifically a huge bull run. Even though, of course, a lot of the bull runs are caused after a drawdown. It incentivizes more of the buying. But let's talk about, let's say macroly. Eisenhower, what he did was, before Eisenhower was elected, Truman micromanaged price controls after the war. So after Truman managed price controls after World War II, he lifted prices controls on some items and kept them on others. However, Eisenhower, on the other hand, was much bolder. On March 17, 1953, he put an end to every price control. And of course, the free market went back up, and that raised a huge amount of optimism because in the private sector, people were buying houses, buying cars on credit, had babies, had all of these huge amount of consumptions. People were buying, especially in the 50s, keep in mind, which I forgot to say, during the Korean War. In this time, the consumption was even stronger and stronger by every year. And you want to know why? Because during this year, and even before that, the consumption kept going stronger ever since after World War II. But over here, everyone was buying houses like crazy because back in that time, a lot of people thought it would be normal for some enemy of the U.S. to suddenly drop a bomb in the U.S. and everyone was fleeing to different states, mostly in the west side of the United States, to buy houses during fields so they can build bunkers and they could build more renovations for the house. And of course, many companies that had services with house repairments and house developments made a lot of money. But it came to a point where during these times, many people bought houses, but repairments were ready for them to, make money because a lot of people were getting houses, and they kept giving the deals whether they would want to renew their house and make their model more nicer. And back in that time, people said, no, I don't want to do that. I have plans for that to do it in 10 years ahead. And I think that's pretty rational. Of course, a lot of the repairments didn't make a lot of money because they had so much inventory, but suddenly their demand had ceased because everyone already bought the house they wanted to and they weren't buying more. They just bought the house that they wanted. They weren't buying multiple different things for the house. So I think that was pretty funny. They didn't want to invest super heavily, but they were crazy to buy every new thing that came out, but to keep that investment that they did. That led to this sort of like stagnation, different corrections with specifically the real estate market and some of the industrial, because they were lacking demand. So they had a lot of supply. And of course, put this with feds and different macroeconomic activity mixed upon it, that could make stagnation. And later afterwards, what caused this with stagnation and that problem in the industrial and real estate market. Over here, Eisenhower lifted all the price controls. And of course, temporarily, many people thought that was a bad thing because they thought that would be too liberal and that would lead to more inflation. And even people who sold more here thought that it would just be like worse and worse and worse, especially when the market goes down, people sell more. But eventually, the market kept going up because earnings were stronger, many companies were still making money, and the market bottoms and no one anticipates it to. And that's what happened here. And afterward, when everyone thought things were going worse over here, already lost a lot of money because the bull market kept going up because of the baby boom. Somewhere around March, Eisenhower lifted those price controls, and that's what officially ignited the baby boom, because it let all of these massive amounts of consumptions freely by every consumer in the U.S. And the majority, a lot of them were baby boomers. They were now born 3 years ago. They were buying diapers. Diapers now were invented, microwaves, barbecues, efficient products for people, and consumption like crazy. Going to parks, having the American dream. That was called the American dream. It really boosted up. And now we're in 1955. Huge bull run. Look, the market's now at $500. You remember when it was at $40? And that's the point when I'm saying $40. It's not to look back or anything like that. I'm just saying that there is no right time to invest in the markets. The right time is now, right? Because no one can anticipate anything, right? You can't make money in the markets if you're expecting to buy and sell quickly and do this and do that. It's just a hassle. It's unnecessary. You don't have to do that. You just buy portions, putting your position in the market, and over the long term, 15 to 20 years, you're going to look back and you've already made 20 times your investment after inflation even. So you see, like, who the hell cares if there was a huge recession here and there was a war over there and a bubble, etc., like when the market has already performed well. You see, that's the mindset you want to have. You don't want to look at the short term, what's happening here. You want to look at the long term, and you want to take advantage of the short terms. You can buy cheaper and you can withhold much more in the long term to get a better investment, which is called the margin of safety.